What's going on, y'all? It is currently 9:30, February 12th, 2026, and I'm going to be showing you guys what a high resistance day look like and what not to trade. So right now, a lot of you guys are probably trading right now. It's 9:37. It's a Thursday. We had 8:30 news, which was this run higher, and then we had a breakdown with the 8:45, 8:50 through 9:10 macro coming down to the sell side, and this is where we currently are at on the hour chart. So we have this buy side above right here and this sell side below. And so with my theory with this is I don't think we are going to hit either this sell side or this buy side in this AM session. I don't think that's going to happen. I really don't think that's going to happen. So for me, I'm going to be off sides today. I'm not going to take any trades, but I am going to post this video for the people who might have took a trade today and lost, because I'm pretty sure that this day is going to be very high resistance and it's going to be a hard day. I know that it is a red photo news day, but that's not always the case for it to be like a long range day. So we are going to see what happens in today's market, and yeah, I'm just going to be going over what I think is going to happen and everything like that. Like I said, I don't think we are going to come far up above these highs, or I really don't even expect for us to take it out. But if we do, you know what I'm saying, we do. But yeah, I think we're going to stay inside the range. Let's go on the 5-minute chart real quick. So let's delete this big range right here. So we have this range right here from high to low. Let me delete this. We have this range right here from high to low. And right now we are at 75% of the range. I think at some point we should climb down to 50% of the range. So I'm a little bit more bearish than I am bullish for the day, just because the simple fact that tomorrow is CPI, and I think they're holding the big expansion move for Friday. You know what I'm saying? I think all the manipulation is going to be on Friday, so I'm really not expecting us to do too much the day before CPI, which is a heavy news day. That's why I'm sort of off sides for the day. And yeah, that's the main reason why I'm a little bit off sides for the day. So yeah, we're just chopping around in that 75% area. Like I said, I'm expecting us to come take out some sell side, heading towards consequent encroachment of the range. But I am gonna let me log out these. Yeah, this was one of the Apex accounts I just passed. Make sure I ain't got no orders in. That was one of the Apex accounts I passed. Trade, paper trade. Matter of fact, I'm gonna just keep the execution going. Wait, did it not turn them off? Okay, so I am gonna trade the macro. I'm gonna trade from 9:45 through 10:15 and see what I could do on this heavy news day. I'm not gonna take anything on my live account or on my funded accounts or anything like that. I'm not that confident in today, so I am gonna just paper trade it. We're gonna see what we can do. So 9:41 right now. We got 4 minutes into the macro. And I know the macro starts at 9:50, but I use 9:45 sauce. So I can't take any trades until we go inside of that time-based Yeah, that's all I'm gonna say. That time-based thing. Now we're consolidating right here. You see we're rejecting off a premium fair value gap inside of this range. Rejected cleanly off it too, right off the high end of that fair value gap. Have some sell side here. Just make this more visible. You see we're coming down from this fair value gap heading towards the sell side. Remember I said in the video, I am more bearish than bullish. I'm not really trying to see higher prices. Today, I want to see price go attack the short-term lows. That's what I'm looking for. We got 2 minutes into the macro, and then I'm able to take a trade. So in the comments, like, if you're watching this video, what strategies or what models do you guys like usually trade? I started watching ICT in 2022. I started with the 22 membership, and ever since then, I just formulated my own model. See, there you go. We just headed down to that sell side. We had a strong push down. Ooh, that was nice. I ain't gonna lie, that was nice for sure. Boom. Right before the macro, 1 minute before the macro. Zoom out a little bit. Go on the 5-minute chart. Let me delete these real quick. Boom. So you can see we coming down to this sell side. These lows right here, I'm expecting this to come down to 50% of the range. Also, we have opening range gap that could possibly be filled in thoroughly after sweeping this high on regular trading hours. Okay, it's now 9:45. Nice rundown. Approaching that sell side. So this is discipline right here. That's another thing I want to talk about. You see how I can predict price and not push a button because it's not in line with my way. It's not in line with my model. What I'm seeing here is just core experience with being in the market. See, we heading down to that 50% level real quick. Let me just show y'all that. Boom. 50% of this range. High to low. 50%. And then taking out that sell side. What I was trying to say is, you see how I can just know when it's not in line with my model to not be in the market and still come to the market and call out moves without feeling like regret of not taking a trade. That's where you want to be at. I have my mom here too, so She been learning how to trade, so she gonna be sitting with me this morning.
After the break, like she's gonna get probably breast because it's break coming. But still make sure she's coming every single day. Huh? I'm gonna try to work from home in a couple of days. I'm off Monday.
Come when you got the phone. Come when you got the phone.
You said what?
Come when you get off the phone.
Oh.
All right, y'all. So y'all see here we are consolidating at this 50% level, this sell side liquidity. I had to just talk to my mom real quick. She on the phone and everything. I had to tell her, like, you know what I'm saying, we in the middle of a video real quick. You know what I'm saying? But boom. If we're going to go further down, I would say we're going to come take out these relative equal lows. My knowledge was going down to this 50% level. Anything after that, yeah, I really don't know. But here is my next prediction for sell side. If I was to be in this trade and left a runner, I would target these lows here. So when I did say I will wait for 9:45 to catch a trade, this sell side has already been hit, so I have to be off sides right now until something else was to happen. I don't want to take a trade going short after we already took sell side, so that's not a good idea. So I have to be off sides. Oh, shit. Hi.
Hi.
I'm recording right now. No, they can't see you. But yeah, I'm with my mom right now, and we about to be going over the tight stuff. Not saying that. But yeah.
You want me to wait until you move?
No. I might not even post this part, but you're gonna see. I'm gonna put it together. You would have seen a little bit earlier my magicianess, but this is important for you to see right these. You're late. So alright, just know right now that I'm expecting maybe for us to come down here. I was expecting us to come down to this sell side, and possibly this sell side when we were up here. So like I called the move coming down here.
When was this?
This was this morning at 8:30, 9:30, around that time.
Okay.
We were up here and then we traded down.
Okay.
So what I was showing you yesterday with the ranges, I'm using that today.
This is the 50%?
Yeah, this is the 50%. And today I'm not taking any trades on my live account or any of my funded accounts because tomorrow is a news day called CPI. It's a big news day. And usually the day before they like to hold the price so they could save the bigger moves for CPI.
Okay.
So usually what I would be looking for if it wasn't a CPI week or if it was CPI day, I would want to see us come above this 50% level into a premium, like I said yesterday, then come take out this high, which is buy side.
Okay. And why not this one? Because this is the most recent high.
It's the most obvious one. Like this is
Okay.
the one that you can see that's most obvious, and it's the first one more more
Re-
obvious than these ones. Like these are still by these highs right here are still highs above 50%, but this one is just a more of a prominent high.
Okay.
So I'm waiting for tomorrow to see if we could get a run above this high and come down lower, taking out these lows, and these lows down here. So that's gonna be my prediction for tomorrow. And a lot of people were bullish on today. They thought the market was going to be going higher today with this run higher. Remember the manipulation runs higher, like the news at 8:30. So it was 8:30 news today. This 8:30 news drove price higher. That was making people think and confusing people that the market is going to go higher. A lot of people probably tried to go long today.
And it didn't.
I knew since tomorrow we have CPI day and they want to most likely hold the price for tomorrow, that they were going to cut it short and come take out these levels right here. That's what I was recording before you had walked in. It played out. Then you see right here, going heading into 945, but it's a little bit before. You got the price going up to the fair value gap, like this one right here. And you see how it respected it. It didn't come down and take out the sell side. So that's where that move started from. So since we did come take out the sell side right before that time that I told you, 9:45 through 10:15. Remember that? So since we came and took out these lows already, that's objective. That means that if I was to take a trade up here, like I called it, but if I was to actually want to take a trade on it, and we came and hit my objective, then I would have to wait for another time or another premium and discount to get reached to take a trade because the objective is already hit. So like if you get it in a trade after an objective it already hit, it could consolidate, or like it's not high probability anymore because we already did what it wanted to do. So now you have to just wait and see what it would do next. But I like to use time, so I will wait for the first 15 minutes of 10 o'clock, and if I don't see nothing there, then I will wait till the last hour of 10 o'clock, which is the 10:50 through 10:45 through 11:15 macro. So what I would see possibly is I'm using ranges. So if I measure this short-term range that we in, just not the big one on the hour chart, just a 5-minute short-term range. The price is trading inside of here from high to low.
Is this a real time?
Yeah, this is real.
Oh.
It's 9:30 in the morning.
Oh.
So right now with this range, we trading inside of the 50% level. When we're at 50% and we already took out the sell side, you want to relax unless you're already in a trade and you could possibly target these lows. But now, since we haven't did anything, we could wait until it target these lows and take them out and trade below it. And then we would be under this 50% level, and that would be a discount relative to this range. So if it don't want to come take out this low, somewhere in between, somewhere below this discount level, under 50%, after it take out these lows, we could expect a short-term run higher back into this range when it creates it. So today, like I said, since it's not CPI day, I'm expecting the range to be an inside range there. That means I'll show you what an inside range day means. let me do another one. You see this candle right here? That green one?
The little green one with the big wicks.
Yeah. I'm expecting this day to stay inside those big wicks and not trade outside of it.
The black.
Yeah, this day right here. Right here. I'm expecting it to stay inside and not trade outside.
You said this day?
Yes, this is the candle of today. I'm expecting this candle right here not to trade outside of yesterday's candle.
Oh, okay.
That means that we would be taking out liquidity. This is a low and this is a high on the daily chart, which means it would be prominent on the hour chart. And I'm not expecting us to take out no major liquidities today.
Oh, okay. This is okay. So that was a day chart.
Yeah.
Okay. So many different freaking charts.
So you see how we're getting closer down to these lows right here, going down to the sell side. So another thing I didn't tell you yesterday, when you have two lows that's like relatively equal to each other, you see how this is equal to this one? That's a prominent, like that's a level where the market like to run to a lot because people will have their orders under here.
Okay.
And a lot of times people like to it's called support and resistance, where like if you have two lows right here and they both went up, sometimes people would think like, oh, if it comes down here again, it's going to go back up. And then it keeps coming down. Or some people might have a breakaway or like a breakout. Like if it comes down below, they expect it to keep coming down below, come down lower. But sometimes it might come down to like another level, like 25%, and then reverse. So multiple things can happen.
Well, it just took out those lows.
Yeah, it's coming down to take out the low. We can't come down to this level. And maybe these lows, but I would expect for us going into 10 o'clock to have a reversal or some sort of like a shift in market structure going back up into this range sometime. But in order to see that, I had to go on the 1 minute chart. I'm like a whiz. I'm like a whiz.
You said you like a whiz? Yeah, you are. Cause I'm still like,
Remember, it's just, well, today is complicated. This is a day where if you was to trade, you would probably get your butt kicked because this is a day where it's tricky to trade. Like, remember how I told you a lot of people think it was going up because we got those buy sides above and then we had this move here. It's like you have to know certain things in the market that's going to not make it do what you think it's going to do, and you have to recognize the manipulation. And that's something that I had trouble with in my first like when I started trading, and like 3-4 years into my trading, I had problems getting stuck inside manipulation. Like every time I lose, I was just in manipulation and not in the actual move. So I had to learn how to trade around the manipulation. That's why I say wait for that stuff that I was telling you yesterday. I don't want to give them a sauce. See how he's starting to go a little bit higher after hitting that sell side.
Mm-hmm.
Okay, so you see how it's 10 o'clock. Remember I said the first 15 minutes to 10 o'clock?
Yeah. You said that you would start seeing some type of what you call it? Always forget.
Reversal or something like that. So this is an inversion right here. If we see price trade above this and close above it, the candles, then I would take a short. I'm gonna take a trade. I'm gonna just show you like a buy I would take. So I didn't show you inversions yesterday. I showed you fair value gaps, but an inversion is a fair value gap on the opposite side of the curve. And once we break it, then that means that the market is not following the sell side of the curve because it's disrespecting a sell side fair value gap. So that's an inversion fair value gap. And then I showed you yesterday regular fair value gaps. We also have a fair value gap right here. You see how you can see it? The candle's not moving that fast like yesterday.
Yes. That's what I need.
So
Don't you have one over here too?
what?
A fair value gap.
This is the fair value gap right here. The sell side fair value gap.
Yeah, okay.
This is the buy side fair value gap.
Okay.
But you can use both. But I showed you the one. I showed you only the regular fair value gaps yesterday. I didn't want to show you this yesterday. But I do use these to get in my trade sometimes. So here, I'm gonna mark up the coordinates for this fair value gap. If we're super bullish, then I would always expect for us to stay above the 50% level of the fair value gap if you measure the range of the fair value gap. So if we're more bullish than usual, then we should stay above 50% and then trade higher.
Bullish is what again?
Market going up.
Okay. Bearish is down. So what do you think the market gonna do?
So right now it could be a resweep. Remember the internal liquidity. Like right now, if we come take out these lows, we may trade higher again, or we could keep trading lower. But right now, since we didn't come above this buy side, it could be a resweep on liquidity, internal liquidity, and then trade higher. Or we could respect this low and trade higher. But the most important thing is that chart setup, that shift in market structure that you're waiting for hasn't happened yet. So you just haven't taken any losses or taken any trades, which is still good. Yeah, so you have to wait. Since we already took the sell side, you have to wait till we trade into a discount and have that shift in market structure. And then that's going to be a signature that the price is going higher and reversing towards buy side.
Your first and second and third, the first week, was you like, what the heck does any of this mean?
Yeah, I didn't know what this means. I mean, my first week, I was learning like the most basic stuff ever. Like this is nothing that I was learning. Like you're just learning like regular, which is like good, but I can't teach you that.
I found somebody. No, I found somebody on 101. What the hell are they talking?
I forgot how to trade like that. All right, so look. You see how we're getting that expansion? This is going to be the shift in market structure. This high right here. This is the first high after us going down. So if we come above here, that's going to be called a shift in market structure or a change in state delivery.
And you think that's what's going to happen?
That's my prediction. Yeah, after we came and took out the sell side, I said that I would want to see us retrace since we trade into a discount and inside of that short term range and took out sell side. I always do. I always get like when you just sitting here waiting for this stuff to happen, you always just get like.
What? Not me, because I'm still trying to figure out what the hell
Yeah.
is happening here. Wait, I still.
You got questions?
I want to show you who this person that I found.
You ain't really asking no questions. Well, yes, you guys ask questions.
So this what I would need. This what I found and what I would need.
I mean, that's like
super basic, starting off just to explain.
well, like what questions do you have? I could just explain it to you. But you don't understand the candles?
Well, I mean, I understand the candles, but I don't understand really what's going on yet.
All right. Let me. No. Let me run it back for you real quick. All right. The main part about this video or this day right here is you're not gonna know what I was talking about yesterday that tomorrow is CPI. That's off of experience and it happening to you losing money millions of times. You're not gonna understand that part.
Right.
What is important for you to understand right now is that we are trading right here, right? We were inside right here, but we're trading inside of a range. That is going to be your own ranges, right? We're trading inside of this range. We're using this range today because we're not expecting price to have a long range day because of CPI tomorrow. So we're using an intraday range or a lower time frame range. You're not going to know that part, but just know that.
But how do you pick your range?
Okay. If we're right here, right? What's the highest high and the highest low to the left? If we started trading all in here, what range is that inside?
Oh, so it'll be this?
Right. It would be this high to this low right here. That's how you get your range. And then, like I told you, if we're above 50%, which we was above here, we was above 50% up here, and you see how we went short down to below 50%, taking out the sell side. Why is that important? Because I told you the big sales or the good sales are going to happen in a premium above 50%. And we're using this range. I told you the good longs are going to happen below 50% after taking sell side relative to this range going up.
Are the buy?
Yeah.
Okay.
So this morning at 9:30, I called out a move coming down, taking out these sell sides. You weren't here. So now that we have already reached the sell side targets and we're in a discount now, we can't take any more sales because we are in a discount and not a premium. Now we have to wait for buys. So the market is just trading right now. That's not important. It's important to just that the market is trading and like you just know. But what's important is when your setup is occurring. So if we're in a discount right now, then we can only buy. The only way you can buy is if price start displacing higher, taking out these short term highs for you to take a trade. So right now you don't know what's going on really because there's not nothing really going on. It's just trading below the sell side.
Mm-hmm.
So there's not really nothing going on right now because we already did the work from here, trading all the way down here, taking out the objectives.
Mm-hmm.
So
And what times do you usually trade? You usually put in your trades what by 9:45
so 9:45 through
through
10:15.
10. So you would have put in a trade by now.
Yeah, but nothing I seen happen because this move right here was at 9:40, 9:41.
Mm.
That's not inside of that 9:45 time. And when by the time it was 9:45, we was already down here taking out the sell side. I want to get in up here. I don't want to be getting in when we already taking out sell side down here because that defeats the purpose of
Trading.
sell high.
Um.
But and once it hit these lows right here, you don't know how far. Once we hit the consequent encroachment, I shouldn't use that word. Once we hit in 50% level of a range, then you don't know how far it's gonna go.
Mm-hmm.
You could say like, okay, now it may look like it's gonna go down here, but like you really don't know. So yeah, that's why I haven't took a trade yet. And it's 10:15. It's going into 10:15 now, so I'm probably not going to take a trade on this macro. I would have to wait until the next macro at 10:45.
Mm-hmm.
If nothing happens before 10:15. You have an inversion fair value gap right here. Well, let me try to do this. You have an inversion fair value gap right here. That's the sell side fair value gap, and we took out the lows, which is internal liquidity. Right, took out this low.
This one did, right?
Yeah, so this low came and took out this low.
Mm-hmm.
After taking out the external liquidities. So remember, they take out two external and internal.
Those were the ones that was close together, right?
And then you see, yeah, and then you see it's expanding higher. Right, so that's a good opportunity. That's a good confirmation for me to buy because we traded above this inversion fair value gap and we have good expansion. So now I have to put my stop loss in. And then I could target something. I had to move fast, but I could target something like this, a short-term high right here.
You just put in a thing. You just
Yeah,
put
just to
in
show
a
you.
trade.
Yeah, just to show you. So, I gotta put my stop loss here.
Why you put it in trade if you didn't think that
If I didn't think what
if it was worth it?
this is a paper trade. It's not real money.
Oh.
And if I was trading and if I did trade inside range days, I would take this trade. We are in a discount of that range that I was telling you about. We took the sell side of that range and we took out internal liquidity right here. We have an inversion fair value gap and we traded above it and we closed above it.
Mm-hmm.
Those are all the confirmations I would need on a regular trading day that I would trade. But the only thing is that this is not a long range day or this is an inside range day. So it's just lower probability to work. That's why I'm not trading this day. But it can definitely still work because all the premises matched up together.
So what does these
So this is my stop loss. If the price come down here and trade below it, it takes me out of trade automatically. If it trades above up to here, then it takes me out the trade and I'll make money.
Okay.
So now since the trade is in, you just don't do anything. But that's how you would look for your trade. So we came from a premium, trade into a discount, took out sell side, took out internal sell side, and then with this run higher, we have a break above a short-term high right here, which is the shift to market structure. So that gives you what you need to take a trade.
Okay.
And then we have an inversion fair value gap right here. So right now I would want this candle that's going down lower to end up respecting it and trading higher. If it comes down below it and start heading towards these lows, then the trade is just wrong.
Okay. So it's supposed to respect the fair value gap?
Yeah, the inversion fair value gap, the sell side. Since we're going higher right now and I'm using the sell side fair value gap, it's called inversion fair value gap. If I was going higher and I was using a buy side fair value gap, then that's just a regular fair value gap. So it's like the opposite. Inversion fair value gap is when you're going higher, but it's a sell side fair value gap that you're using. And the buy side fair value gap is the same thing. Like you're going higher, you use buy side fair value gap.
So what's this number? This one?
That's your money right now. Like that's how much you making and losing.
Okay. So you losing right now?
Yeah, I'm down right now.
No. And then if it got up to here, you would make $241.
Yeah, so it's like a 1-to-1 fixed risk reward. So it's like make $200 to make $200. I usually do 1 to 3 and up, like 1 to 3, 1 to 4 risk reward. Like if I was risking $200, I would be going for at least $600. But this is not a day to hour trade, so it's I'm just using like basic market structure. I'm putting my sell side under the low. If it was high probability, I would put my sell side. I would put my stop loss like right here, expecting us not to trade below it. So this is going down to the 50% level of this inversion fair value gap. So I would want to see some retracement down here because I told you that if we're going higher, then I would want us to see when we see like fair value gaps or anything like that. I want to see it stay above 50%. Because if it start going below 50% down here, then it's probably not that that valuable yet. Strong. But you see how you get the little retracement after trading to 50%.
You got the low what?
You got the retracement. A retracement is like when we turn around and start running back higher. So no, that's not a retracement. We had a retracement down here into a retracement is when we going up, but we start coming down temporarily. So we had a little retracement coming down into this inversion level. And then this candle started pushing up higher. I would want to see us continue higher, but I wanted to know that it started going higher after coming down to this 50% level. But you don't gotta think too much about that right now. I just want you to know that I'm using certain levels inside of these fair value gaps and stuff.
I'm just curious to see now what it does.
I mean, it's not looking too bright. But we're still in it. Yeah, this is not my real money. This is paper trade.
Because if it was your real money, you wouldn't have put it in the bed, right?
Nah, I'm not trading today.
Yeah. And the paper trades, those it's just like it's like your demo account or something.
Mm-hmm.
Okay, that's what I would be using.
Yeah.
I'm gonna be doing a lot of
See how it came, right? You see how it came directly down to the end of that fair value gap, convergent fair value gap. It then broke above this high.
Yeah.
Yes, this is what you want to see here. Okay, and I will show you this. So now since we going higher, I have to use this range here. This is what I was telling you.
What?
From this high to this low. So if we do make it above this high right here, inside of this range, this is the 50% level, right? Inside of this range, we would be trading inside a premium taking out buy side. Trading above 50%.
Yeah, that's the
taking
premium.
out. This is the premium.
Right.
And then this is the high.
Okay.
Man, they're trying to be stubborn. Wait, what you confusing?
The high.
Look, you don't see this wick right here?
I see that, but I see these too.
We worrying about the first high above the premium.
Oh, the first.
This is the inside range today, so you don't know if it's gonna have that big run all the way back up there. So we using short term take profit areas.
Okay, but why wouldn't it be
this one? You could target that, but this one, if you want to get paid, you're gonna pick the first one. Don't try to pick the second one because you don't know if it's gonna get there.
Oh, well, wouldn't this be the first one?
No, that's not a high. Because remember I told you a high is consisted of 3 candles. One is the middle one. If you think this is the high, this is going to be the middle candle. This one is lower, but this one is higher. This is the high.
So you have to do these 3?
Yeah.
Okay. And what did the highest 3 just consisted of what? Oh, wait, no. That's the
A high is consists of 3 candles. The middle one being the highest candle. So the 2 on the left and right have to be shorter than the one on the middle.
The middle what? I'm sorry.
What do you have? What did you got written down?
A high consists of 3 candles. The
middle one being the highest. I mean, it would be really cool if we smack. Let me delete this.
Delete what?
That box. No, I would expect us to definitely not trade below this 50% level because we already did it here.
You don't think it's gonna go below?
I wouldn't expect it to. No, I don't want it to. Because we already did it and rejected off of it. We already traded down here, so there's no reason for us to come back down here. This is what I was telling them in the beginning of the video, that this is gonna be a not so easy day to trade, and it's not going to just run how you want it to run. It's gonna be like choppy kind of. But I promised I'll take a trade. And this is the best trade I would take. Another thing too is the market run on time. So we can be holding this into 10:30 or going into the next macro at 10:50, 10:45. So they can be holding the price until that time.
You said they can?
Yeah, they can hold it. So like they could just make it consolidate until it hits that time, and then they'll start running it.
And would that mess you up?
No, I know the market run on time,
Oh.
so I'm not rushing it because I know it's not really time for it to run. And I took my trade. This is where I entered the trade at 10:14. That's still inside of my time. My time ends at 10:15. So I took it 1 minute before it was over. So I did everything I was supposed to do. I just have to wait now. But every day it's not going to be that easy day that just go where you want it to quick. Some days may take a while like this. But I gave you the reason why it's trading like this. It's because CPI is tomorrow. And they're holding it. Maybe at like 10:30. That's the time where it usually does something sometimes, but I think maybe 10:45. It would be something else going on.
You got some orange juice or something? You ain't got nothing
I
that
got
way?
water. You want the water?
No.
Wait, I don't know. I think I used it.
You drunk it all?
Yeah.
I know grandma don't have any.
I be using it for my smoothies, so it'll be going quick. ICT would be proud. The old man that I learned from named ICT.
You said he should be proud. Do he have like a course, or you like was talking to him?
Nah, he posts YouTube videos.
Oh, okay.
And it's like a mentorship, but in YouTube video format. And I was learning that, and then I took what I learned from that, and I started watching his videos and just formulated my own way around what I learned from him.
Okay.
And that took a long time, since 2022.
Absolutely.
See how it could be nerve wracking when it's a day like this. Just keep going higher, then it just keep going back down.
Mm-hmm.
And then it feels like your real money in here. But it's like, it's not, you train yourself to not be that way. That's how, well, I don't know how you would be, like, if you were trading, like, your actual money. I mean, I would tell you to not, don't trip, because it's not that big of a deal. Especially if you put it inside of an account. But, yeah, it's probably about to lose. But, yeah, it's expected. So there's a lower probability there. She's like, nah, this nigga suck. No, I'm just like,
That was close.
it's gonna hit it. I ain't gonna get that quick and not hit it. I mean, that close. Right. You can just take it out too if you want, but I swear it's legit.
Well, it ain't your money.
Yeah, I know. I'm just saying. I was just telling you you could do that.
So you don't think it'll go up there?
It's not as likely anymore since it did that, but bro, just do it. I don't even want to do it.
Yeah, I don't want you to do it because I want to just see it happen. So it stopped it.
So boom, that was a loss. Do not trade days before the CPI that have a very appealing buy side liquidity that you know that's going to be used for tomorrow. That is the lesson.